My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I've been one of my friends is just trying to make you a little money. My job is not just to entertain, but to educate and teach, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. Another day, another rally, with the Dow advancing 92 points, S&P gaining 0.39%, Nasdaq climbing 0.57%. Thanks to decent earnings and an unemployment number that was weak enough to keep the stimulus balls in the air, and the market needs that. But the real driver of this week's terrific move was actually last week's turmoil. Last week, the Reddit revolutionaries produced some crazy action, which caused a bunch of important strategists to go downright negative. Their newfound negativity allowed us to get back on track because it meant we had lots of bears who could then turn back into being bulls as the week went on. And that's what happened when we got tremendous reports from a video game publisher, Activision Blizzard, a car company, Ford, and a cosmetics titan, Estee Lauder. We'll hear from their brilliant CEO, Fabrizio Freda, later tonight. With that in mind, what's the game plan for next week? All right, Monday we go right back to gaming when Take-Two Interactive reports. We'll find out if it's more like the delightful Activision or the disappointing Electronic Arts. Knowing CEO Strauss Zelnick, I bet we're going to get a nice upside surprise, especially now that we're starting to get leaks about the next Grand Theft Auto version. Remember, that is the biggest franchise in gaming history. How about the mall? What is going on here? Lately, a bunch of mall-based retailers have been catching upgrades. Think Tapestry, L Brands, even Foot Locker. Is the strength real? I can't wait to find out when we get results from Simon Property Group, the largest mall owner on earth. Tuesday morning, we hear from the new DuPont, the specialty materials business focused on some booming end markets like autos, 5G, electronics, and housing. I expect great things, which is why I pounded the table on DuPont earlier this week on my monthly ActionAlertsPlus.com conference call. DuPont's a terrific manufacturing amalgam that's spewing cash. With the Democrats running Washington, investors are going to be going nuts again for cannabis, right? I mean, look at Jazz Pharmaceuticals buying my favorite marijuana adjacent play, GW Pharma, 50% premium earlier this week. Next week, we'll be watching Canopy Growth, the big Canadian grower. Lots of excitement here because the Democrats want to decriminalize. But Canopy and its cohort actually need full legalization if they're going to keep going higher. We'll get there eventually, though probably not as soon as the bulls hope. Cisco reports after the close, and this stock's been moving up nicely now that Enterprise 5G has come knocking. Some of it might also be that WebEx, which is going up against Zoom, is doing better. Cisco's gradually been transitioning away from hardware toward more software. And I think we're getting close to the inflection point where the stock should start to get a much higher valuation. Can't wait for it to happen. See, you got to get in ahead of it. Remember when Twitter permanently suspended Trump's account there? At first, we worried that would be bad for business, right? But judging by the recent action in the stock, maybe they should have blocked him a lot sooner. So far, this has been a great quarter for every big internet brand, from Alphabet to Facebook to Snap to that amazing quarter from Pinterest. Twitter still has plenty of room to run. Wednesday morning, we hear from General Motors. We just got some great numbers this morning from Ford, marred only by a semiconductor shortage that's not going away anytime soon. If GM says the same thing now, well, maybe they won't be punished for it. More importantly, I'm expecting an explosion in free cash flow and a commitment to ending the internal combustion engine in a little over a decade. You heard me. I think CEO Mary Barra has done some remarkable things here, creating a battery technology that's worth the price of the entire company. GM can use its prodigious sales and cash flow to invest in electrics all she wants. I bet we hear great things. Should we still care about the stock of Coca-Cola? Of course. It's not often you can get the stock of a terrific company with a 3.5% yield. Remember what bonds give you. That's down in part because so many of its restaurant customers are shut down. Once we reopen, that business should come roaring back. For now, though, the stock is too cheap to ignore. After the close, we get results. This is fun. From Zynga, yes, the mobile gaming play. The whole video gaming business is on fire, and the rising tide is lifting all boats, including Zynga. Now, if GameStop had been smart, they could have done a big equity offering last week and used that money to buy this thing. But with the stock back now down in the 60s, well, look, let's just say they'd missed the opportunity or they'll continue to miss it. I wanted to get Navin Johnson on the board. I'm going to maybe have a proxy fight there. On Thursday morning, PepsiCo reports, and I think they'll deliver an excellent number because their snack business gives them a lot more consumer exposure than Coca-Cola has. Yeah, Frito-Lay. But will anyone care? The last quarter was picture perfect, yet the market yawned because we had gotten bored with the staples. You know me, I never get bored making money. And I bet PepsiCo's business is accelerating nicely. After the close, I get to hear the mellifluous voice of America's best CFO, Christine McCarthy, the architect behind Walt Disney's amazing balance sheet moves that have allowed the company to play offense at a time when they should have been reeling. As I've said many times to you, Disney is my favorite reopening stock. I'm pounding the table again. Buy! Meanwhile, their streaming service, Disney Plus, just won't quit because it's an incredible bargain. When you see how well this company does without movie theaters, without crowded parks, without cruises, even without sports at one point last year, what happens when that all comes back? I see this $180 stock headed to 200. Do not pass go. Collect that 200. However, Thursday's marquee event is the PayPal analyst meeting. This company's become some weird hybrid financial tech and friend that's delivering a stunning level of growth. I've liked PayPal ever since it was spun off by eBay in 2015. I actually think the business is about to re-accelerate this year. I say re-accelerate because they've already reported a magnificent quarter last week. I bet what you'll hear from CEO Dan Schulman at the analyst meeting, I recommend buying the stock beforehand if you don't already, it's going to be just spectacular. Finally, on Friday, we hear from a forgotten company that could be about to get some love again. Newell Brands. Stock's been creeping up. There's been so much sturm and drang about this one, mostly because of the board challenges and missed quarters. Those issues are definitively behind them. I think Newell's comeback is real, and the stock can still be bought. Here's the bottom line. I can't guarantee that this week's placid run will continue. This was the calm after the thwarted rocket ship emoji revolution. But thankfully, it feels like we're back in the business of trying to make money again by finding the stocks of companies with good fundamentals. Nice change of pace. Let's go to Max in Florida. Max.
Hey, Jim. I just had a question for you about Virgin acquisition. I bought on the news last week about a possible merger with 23andMe, and now that the cat's out of the bag, I wanted to hear your thoughts on it.
Well, look, this is one of those where the cat, actually, you know what? You said it. The cat is out of the bag. I don't know what happens now. I think it's happened. I think you move on and you find the next cat. Best thing I can say. How about Sarah in Texas? Sarah.
Hi, Jim. I'm a college student from Texas, and I'm just starting to learn about investing, and I'm a huge fan of yours, so thank you for taking my call. My question is about J&J. I invested in J&J this past summer towards the beginning of the pandemic, and I'm really happy with the return that I've seen so far. But I noticed that last week the stock price dropped by about 4% when the news of the vaccine's efficacy came out. So my question is, what do you think? Should I buy more or hold at my current position? And what do you see for the future of J&J and this vaccine rollout?
Johnson & Johnson AAA balance sheet, one of the few in the whole world, unbelievable management, great product portfolio. You own that stock, and if it comes down, what you do is this. Buy! Pretty simple. I need to go to Seth in Wisconsin. Seth!
Hi, Jim. I appreciate you having me on today.
Of course. I'm glad you're here.
So with the biggest betting day of the year coming up Sunday, I think it's very timely to ask you about DraftKings, symbol DKNG. Roughly half of states have legalized sports betting. Right. Oh, go please. Look, I know these guys really well. 16... I happen to have I'm sorry. I just want to tell you, I always want to disclose this. I have a deal with them called Bull Market Fantasy. I think that's a remarkable company. I think Penn National and DraftKings are the two ways to play gambling. And gambling is sweeping the country. And it's still not reflected in the price of DraftKings stock and the unbelievable management team they have. So I'm going to say, once again, buy! All right, it feels like we're back in business. And boy, what a great feeling, isn't it? On Mad Money tonight, time to sail away with Brunswick. I'm talking with the CEO fresh off earnings. Then my exclusive with Estee Lauder after earnings to find out how the beauty business is changing because of the pandemic. And could Sanofi's partnership with GlaxoSmithKline on the COVID-19 vaccine help push the stock to new heights if they can get it right? Or are there other things in play? I've got the CEO after earnings. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call. at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.